Hello everyone, George DeSantis here with a look at the market for the week ending December 1st, 2017. First of all, I want to apologize for my voice, raspy voice, because I've had a laryngitis for the past week. I can't seem to shake it yet. So let's take a look at the disclaimer. You should pause it and read it because it's important that you know that this is not a solicitation for or advice to buy or sell any securities. Now we'll begin to take a look at the market by bringing up a chart of the S&P. Well, here's a weekly chart of the S&P 500. So we can notice that the 4 EMA is above the 9 above the 30 weighted moving average, and that is indicating to us that there is an uptrend according to the moving averages and their position relative to each other. And of course, the parabolic, I put the parabolic on again recently. The parabolic is still continuing to be below the most recent bar. So we do have an uptrend. There's no indication from the parabolic to reverse this uptrend, in other words. So at the middle of the chart, we can see MACD trending up again. There is the divergence that we had here when prices made higher highs and MACD made a lower high. This divergence here, if you draw a line here, I took it off because if chart gets very crowded, this seems to have played itself out in this area. And now we're in a bullish mode again. So this is really a very bullish chart. In fact, we'll take a look at the daily chart and see some more data on that. But Williams percentile is way above the 20% line, and RSI 12 likewise above the 60% line, and we have a nice uptrend here with ADX rising and DI plus above DI minus. What's not to like, as the guy says? So let's take a look at the daily chart. On this daily chart of the S&P, we can see here that we rode the upper Bollinger Band for the last few days of last week, and we actually were hitting the upper Bollinger Band. Now, the upper Bollinger Band is at 2.72 standard deviations, so that makes it overbought, and we pull back. We pull back here when we hit it here, we pull back here. When we hit it here and went above it for high, we pull back here. And of course, on Friday, we had this is now a hanging man. So because it's at the top of a trend, right? It's a hanging man. If it were at the bottom of a trend, it would be a hammer. But since the position of this candlestick tells us that it's a hanging man, so it's bearish. But all that could mean is that because we went so high up and hit the upper Bollinger Band, it's now pulling back into more of the buy zone. See, the low was between the 9 and the 30, which is the buy zone, but it closed above that. So it still looks pretty bullish. Look at MACD. MACD is trending up very strong. Williams percentile are above the 60% line, RSI 12 above that the 60% line. Actually, Williams above the 20% line. We get confused with these sometimes. And the directional index is a plus is still above minus, and ADX is still trending up, although it seemed to have just sort of flattened out here a little bit. But the bottom line is that this market is still trending up. We are riding the upper Bollinger Band, which is a good thing coming out of this squeeze, okay? So both the weekly and the daily charts on the S&P look very strong. The blip we had on Friday last week, on Wednesday last week, really was something that was unusual because the small caps took a beating, but they rebounded again by the end of the week. They rebounded somewhat. So let's go on and take a look at some individuals. Before we go to look at some of the stocks we usually look at, some time ago, one of my friends asked me about energy stocks, the oil stocks, and I wasn't too keen on it, but the stocks energy actually had a rally here. XLE is an ETF of energy stocks, and it rallied nicely. Then it went into a trading range. And what I'm noticing here now, and I got this from stockcharts.com. There was a good article on it. You have a what you call it a morning star here, bearish candle, doji, and a very bullish candle. These three candlesticks together make up a bullish morning star. So the market should continue to go higher from here, breaking out of this trading range. The other thing I notice here is you have what we call a fractal. This bar here, this candlestick here, this high is higher than these two highs and these two highs. And the way I would play this is to have a buy stop order just above the high of this bar, which would be about 70.55 or so, about 10 points above the high of this bar, which would be about 57, 70.57. Because once you break above the top of this bar, you've um, you've you've filled on this fractal, and you should go higher. The Bollinger Band is quite a distance away, so we might get a nice little rally here. I'm not too keen on the energy stocks because of all the politics in the Middle East and all the manipulations and whatnot. But this looks like a good play here. This could be profitable. Let's look at something else. So here's a weekly chart of Apple, one of my favorites anyway. I still own it. What we had here was a nice rally hitting the upper Bollinger Band, and when that happens, it's overbought. And so we then went into this consolidation or trading range, and it looks as though we might be ready to break out of here. We have this harami, these two bars. The body of this bar is totally engulfed by the body of this bar. So we have a bullish harami. It's sometimes referred to as a pregnant woman. You know, this the fetus and the body. Strange name to give a stock chart anyway, a stock formation. Um, so we'll see on the daily chart why we might anticipate a nicer move here. I plotted a triangle there. However, MACD is still above zero line, so it's in bullish territory. Williams percent R looking very bullish. Likewise, RSI 12 above 60%, and so on. Let's take a look at the daily chart. On the daily chart, I plotted a triangle, see? A so-called symmetrical triangle. Obviously, it's not really symmetrical, but we refer to it as such. We have some mixed signals here. We have the parabolic above the last three bars on the daily chart, but because we have this triangle here, and you can see the moving averages 9 and 4, yellow and red, sitting just above the green line, which is the 30 weighted moving average. It seems as though we are going to break out of this triangle, and I calculated the target of 179.30 and 38 cents. $179.30 and 38 cents. So just about where the arrow is now, the cursor is, that's where we could expect Apple to go if we break out of this triangle to the upside, of course, and that would be a nice target, 179.38. So look for that. MACD is still in bearish territory. But there is no real divergence here. Williams percent are not bad. It's still sitting around 60%, 20% is at 24.75. And RSI 12, though, you can see it bumped off the 40% line. So there's some mixed signals here, but I'm betting that this triangle is going to materialize in a breakout to the upside, target 179.38. Let's look at another chart. Here's a weekly chart of Facebook. This is one of those FANG stocks that got hit pretty hard on Wednesday last week. And we could see for the week, it traded down. We had a bullish candle here, and we had a very bearish candle. It was bearish engulfing because it engulfed this body here. This body engulfed this, right? but we notice that it's touching the upper Bollinger Band, and bands seem to be coming together in a squeeze. So sooner or later, this thing should materialize into a more dramatic move, because it's been in a pretty long trading range somewhat here, and it should materialize as a nice move, either up or down. Bollinger's squeezes don't tell you which direction, right? But we should get some kind of a move here. I'm holding Facebook, and I think that it should give us a move on the upside. But there's definitely this bearish candle here that we should be concerned about. On the other hand, the moving averages are above each other still, and the parabolic is still below the most recent bar. So the parabolic is not indicating a switch to a downtrend yet, anyway. We had this bearish divergence here. You can see MACD making lower highs as the market made a higher high. And so that was a bearish divergence. And so that may need to play itself out. Then on the other side of the coin, on the bullish side, we have a close between the 9 and the 30. And usually this is the buy zone. So we are closing between the 9 EMA and the 30 weighted moving average, which is typically the buy zone. So let's take a look at the daily chart. Now on the daily chart, we have a whole different picture. We did have a squeeze, and the squeeze played itself out to the downside. This is Wednesday's very bearish bar. We all know what that was about. 300 plus points on the S&P, I believe. But that bar touched the lower Bollinger Band. This bar on Friday is touching the lower Bollinger Band. Parabolic is now above the most recent bars. So we have a temporary downtrend here at least. How far down? Well, notice that we should find support over here at this level at about 170. We should find support. So even if we come down a little more, we should begin to find some support somewhere around here. That's my take on Facebook. Let's take a look at something else. Here's a stock we haven't looked at in a while. I just realized that. Berkshire Hathaway, or the B shares, BRKB. Well, we came into the buy zone. See how this buy zone works? It worked here. We closed in the buy zone. We went up. We come back into the buy zone, and now we have this nice bullish bar last week. Okay, and the parabolic is now below the Friday's bar. So we're switching to an uptrend here now. And here's where you should be buying the stock. Of course, if you didn't own it, we already own it and continue to keep it. Williams percentile took a nice little move up here because of this big bullish day on Friday, on last week rather. This is a weekly chart. And you can see the other indicators looking bullish. Insofar as the daily chart is concerned, you can see how it's riding the upper Bollinger Band. But don't be surprised to see a little bit of a correction, because this is a hanging man. A hanging man is bearish, and it could pull back closer into the buy zone on the daily chart. So we might see a little bit of a correction here after this nice run-up. Or it may even go into a trading range. Let's look at something else. Here's a weekly chart of FFTY, which is the IBD 50, and it's been doing very, very well. Went into a bit of a consolidation here, went up again, and then pulled back last week. Parabolic is now above the most recent bar, but notice the 4 EMA is still above the 9, and the 9 is above the 30 weighted moving average. So we still have an uptrend according to the moving averages. And MACD is still above the zero line, and there is no divergence on the weekly chart. So I'm not too concerned about FFTY. It's pretty well diversified. But what happened here is that a lot of the technology stocks were overbought. We've been seeing that for weeks. They were very overbought, you know, on the best choice charts. They were at somewhere around the 90% line. And that's all we have. I expect FFTY to rally from here. Well, folks, that's all the time we have, and perhaps all the time my voice has too. So we'll close it up for today and try to do this again next week, God willing. Bye-bye.